U.S. Treasuries took down.
Welcome back, Rebels. Rebel Leader here, and today we're talking about the best stock to buy for October 2021. Market has been down relatively the past few months, great buying opportunity, but as we go to the end of the year, we might start to see bigger dips, people moving money in and out of different stocks for tax purposes, year-end, things that they want to do for bookkeeping, or maybe they want to basically move money out, cut their losses, and basically switch around their stock portfolio. When they do this, the market always tends to kind of go down in December. We've seen it in the past few years. It's not a reason necessarily to take all your money out. That's not how it works. And there's reasons you wouldn't want to do that regardless, because then you would have to pay taxes on it if you took it out, all your gains. But I say this because now is the time to look at the stocks that are not only really safe. You want to evaluate your entire portfolio as the year comes to an end, and you want to see which is making money versus which has not been making money. And if after 1 year a stock hasn't really making money, it's probably time to cut it. If you've lost more than 10% on a single stock at the end of 1 year, it's going to be time to cut it. Now, there's exceptions to the rule if you really believe that this company is going to skyrocket in the future, but a lot of times there is no exception. You know, the exceptions are very few, and the reason you want to do this is because you don't want to hold on to a loser, and you don't want to waste opportunity cost. The opportunity cost of you putting your money somewhere else has better opportunity and better gains in both the short and long term. Now, I want to talk about Coinbase, because Coinbase has been booming, I think 15% in just the past few days. That's a great stock for, again, the crypto. And we're gonna see that that's kind of a stock that we got into a few months ago that has been moving relatively stable. And that's not a stock you want to cut at the end of the year. That's a stock you want to cut 1 year from your buy-in date. That's kind of when you want to cut it. You don't want to cut it randomly at the year end 2021. So that's a stock that's going in the right direction. Tons of hype around cryptocurrencies currently. We want to keep it. But what about a stock like Facebook and all these big tech companies that haven't been doing so well? Recently, they've kind of stagnated, right? Now is actually a good opportunity not to sell your big tech. Now is actually an opportunity to buy more big tech. And you should technically always be buying these big tech companies stocks because they're relatively, they're very safe. And you can even use it almost as like holding for your riskier positions. And you can just put some money into Facebook or Apple until you want to take a bigger risk and just sell that stock really fast. But as we come to the year end, stock to buy for October 2021 is going to be Google, ticker symbol GOOG. And this stock seemingly just always goes up. And for good reason. It's the most powerful company in the world. You always have these big antitrust lawsuits coming around, swirling. And to be honest, you want to own the most powerful company in the world. It's not something bad for business, right? To be that powerful. If anything, it's literally every business's dream to be a global powerhouse, to be able to affect policy, to be able to, I don't want to say manipulate the market, but control different verticals of the market, and also just have such a brand loyalty and brand name as part of it. Probably know Google best for the Google search engine, but it owns YouTube, it owns Android, the phones that are named right to Apple. Google wants to enter the smart car race now. And then you also have, again, the Google search engine being probably the most powerful tool and the number one most searched website for the past 20 years or something crazy like that, or since invention. It's kind of branding power. And people knowing the name Google will extend into many different verticals, as we're seeing now with the rest of big tech. Like Netflix is trying to attack more verticals, much more than just the entertainment streaming space, because they know they have this brand power. So now what we're gonna see in Google is that this stock over the past year has run up almost 100%. I think it's maybe at 90%. Depending on where you bought. And in the past 3 months, it's up around 20%. In the past 5 years, it's up around 300%. This kind of company is not only very safe, it's just gonna be a slow, steady crawl upward, but not even as slow as you might think. Again, just a year ago, you would have already 2x your money if you just threw it all into Google. And this is kind of how you want to play. You don't really want to get into something called activity bias, where you're constantly making moves in your stock portfolio thinking that it's what you need to do to make money in the stock market. It's called the activity bias, and actually what you should be doing is keeping your investments for at least a year and seeing how well they perform. If they perform well, leave it. Why would you sell off your good performing assets unless there's really another opportunity in the market you want to take your money out of and throw it in there? But again, the reason we invest every month is because we can attack those opportunities without losing our current investments and our assets. So we want to keep companies like Google and big tech in our portfolio, especially in the coming months, because as history has shown in the past 2 years, they've been incredibly resilient to downturns, to crashes, to even the big March dip when COVID happened in 2020, and there was another March dip this year in 2021, and big tech has just been constantly outperforming. People are flocking, investors and hedge funds are flocking to these stable, safe companies with big brand names because they think these are going to be the winners. So Google is a stock to buy for right now. You can keep buying this. Again, you can throw money into it every single month. It's something that's going to be very safe for your portfolio. That's going to keep increasing, and it's also something that's going to help weather the coming downturn that's going to be expected in December. And it's okay if stock go down for a few days. That's not why we buy stocks, right? We're going after, again, how we can 2x our money in the span of a year or 2 years or 3 years. Doesn't matter when it runs up, as long as it does. You don't want to time it where there's some expectation that you need that money for next month's rent, right? That's not why we invest money. We invest it because we know and believe in it over the long term. And that's why it's more of like you can think about it as a savings account or really an asset that will appreciate in value over time. And you don't want to sell off your assets. You want to make sure what the money you're putting in there is going to stay in there. And that's why you really don't want to take any money out of your stock market account. If anything, you can stop putting in money and and use it for your discretionary spending that month. Maybe you put in less money in the stock market that month because you have an upcoming expense that you really want to buy. That's kind of a better way to look at that. Your money is really untouchable when you put it in stock market account. And now you can, with that money in that account, you can then play with your portfolio. But you should never really take money out. Only put money in. That's like a basic rule for investing 101. There you have it. It's Halloween time. Don't get spooked out by some market downturns, some market swings. There's talk about potential crashes coming soon. Hard to play, but you can play the swings regardless. If you want any stock that goes down, 5-10% immediately, pick it up and you'll get the bounce back really quick. You can sell it if you don't believe in the long term. That's literally a strategy people do. They just buy whatever's been pummeled down. Recently, again, Coinbase was a great example of it. Coinbase was beaten down to like $220 a share. Now it's risen up to $280, $300 again. That's where it's been. IPO'd almost at $350. It's kind of playing this, the bounce back. You're basically playing the curves, right? It goes up and down, the cyclical nature of it. You don't have to believe in things for long term if you're gonna try to make money, kind of in the short term like that. It's okay, year end, try to analyze what you did this past year, the good, the bad. It's always about a learning experience. And also, we're gonna make some money in the long term. So 1 year, 2 years, you win no matter what. It doesn't really matter. When you win, you win. Again, when these stocks start blowing up, they start going to the moon, they don't come back down. It just, it's how it works. And then those money gained is really yours, right? It's real. There you have it. Rebels, stay strong, stay frosty. Rebel leader, over and out.